This is the podcast. This is a Stock Trading Reality Podcast, episode 47. All right, hopefully you already saw this in the title of the podcast, but if you didn't, this is actually part 2 of an interview we did. So if you want the best effect, if you want to live the journey in its intended form, make sure you listen to episode 46 first, and then you can hop back here and listen to this, and that way everything flows together very nicely. So again, episode 46, if you haven't listened to that one, as this episode is a part number 2 of MR's journey from the chat room. So let's get right back to part number 2.
Then one day I stumbled into your chat room and I started talking about fundamentals, and I was immediately chastised like I had the plague.
This is true.
It was very I was like, holy crud, you know.
I do remember when you arrived. Yeah, you were. We don't have very many people with a fundamental background, so
when you bring up the
probably
word,
came off a little strong.
Yeah, when people say like PE ratio in our chat room, like, what did you call me? You know, that's kind of like balance sheet. You called me a what? You know, so it's kind of like so. Yeah.
I actually, on the stocks that I hold large positions in, and that I actually listen to their conference calls because they have a lot of things to say. And when you have conviction in your stock, it makes it a lot easier to hold through some of the downturns. But like your education, you have to learn to look for the signs of what's going on in the main market and what's going on with those charts, because if the market's going up, 75% of all stocks go up with it. When the market's going down, 90% of all stocks are going down with it. So you need to figure out what's going on and act accordingly. And that was, I've learned a ton from your charting. You know, I never looked at charts before. I would look at them roughly just to see where the old high was, or if I'm close to an all-time low. I never really understood what I was looking at, and that was like eye-opening, and you know, that was a very big change for me.
Now, how about in the RVR course, we're specifically focused on kind of risk management and kind of your risk versus reward, and how to what we think are kind of ideal setups for that, and how to structure trades and stuff. Did you going through that course? Did you think to yourself, I could have applied this in the past, or was this kind of something you learned and said, you know what, I'm going to apply this to my shorter term trades strictly?
No, you can apply it to every trade, just depending on what time frame you look at. And yes, I've thought of that a lot. But you also have to look at the different time periods in my life. I mean, when I was trading with Lori at Merrill Lynch, she would call me up in the morning and say, "Hey, Mike, there's this stock. It's really moving. You want to buy it?" And I'd be like, "Sure, buy 20,000 shares." And it would cost me like $1,800 to do a trade or something, and it would be ridiculous. Didn't even look at a chart, didn't even know what the company did at that, for something like that. So it's totally applicable now. And if but back then it would have been too if you looked at a chart.
Yeah, I'm actually curious. Maybe you don't know, but if you did want to see a chart, let's say back when you were working with Lori, was the internet around at that point? Or like, how did you even get charts back then? Did they show up in the newspaper, or did they just not even exist? I guess now that I stop and think about it, that'd kind of be interesting to research the history of charts and how people actually got access to them before the internet was around.
The newspaper was what had your big business section with all your stock quotes in it. CNBC was just percolating then, and you could see all the tickers go by and listen to their rah-rah, the market stuff. And then the first online platforms just started coming out. You could go to, I'm trying to think, I know you could go to Yahoo, but charts back then they were not like charts now, not in any way, shape, or form. I used to go to MSN Money a lot, and they had a lot of different types of places you could look for stock ideas and stuff. So it was beginning. The online revolution was underway, and I believe E-Trade, Daytech, and I can't remember. I mean, it's so long ago. It's 20 years ago. So, but there were some starting to come around then. But the established brokerage houses were terrible. I mean, you couldn't trade pre-market or aftermarket. they had eventually rolled out some clunky online app that was terrible. I can't remember too many details about it. Trading fees were absolutely staggering. I mean, people complain about paying $9.99 a trade or whatever in our chat room because obviously that's not good now, but I've paid $1,800 for a trade. When I've made trades where I'm like, oh, cool. What price are we selling at? And she says X amount of dollars, and I'm like, all right, we made $1,600. Well, actually, you lost $200 because it was $800 to trade, or $1,800 to trade. I'm like, oh my God, you're kidding me. She goes, well, when you don't trade the more liquid blue chip stocks, we have blah 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 fees and this and that. So things have come a long way.
I think I will remember that going forward, that I don't need to complain about, because I always tell the funny story. When I first got started, I paid $60 to buy and $60 to sell when I didn't know what was going on, because I used my small little community banks, quote unquote, online brokerage. But okay, 120 even versus 1800. Yeah, I'll learn to try to keep things in perspective. But that's pretty funny how. And again, it goes back to just still a universal rule. Sure, now $9.99 is very expensive, but for you is nothing. But it always goes back to commissions. If you're out there, that's something you need to be very aware of, because it's a cost of doing business. And if you want to run a proper business, you got to keep your costs as best under control as possible. In
complete fairness and transparency, I think that's something that anybody as a trader is going to do. You can try to prepare as best you can, but I had a $60 one-way trade and a $60 one-way, so $120 total, and I didn't realize it, and I was like, yeah, I'm up $80. So it's gonna happen. It's probably gonna happen at least once or twice, but you'll get the hang of it. Don't worry. Just don't continue to do it. You got to pay attention to that stuff, because that's a big cost of business.
Was that Sure Trader for you, Ches?
That was certainly Sure Trader.
Sure Trader is garbage,
share,
okay?
Yeah.
All listeners, stay away. If anybody tells you to go with them, they're probably affiliate marketers getting paid for you to sign up. So just stay away from, they're pure garbage. So, and if Sure Trader, if you have a problem with that, if you listen, well then, never mind. Who cares? So I'm going to start on another mini rant. So, all right. So you're going through the courses, you're learning about charts. And did you ever get into options in the sense of directional trading, or let me ask this: did you ever get into options at all, really?
I did earlier in my, I don't want to call it a career, but earlier in my trading experience,
Your journey. Yes,
my journey.
There we go.
I had traded some leaps because my buddy was into the leaps, and he still is, and he trades bull call spreads, and he trades massive amounts of money, and he controls incredible amounts of shares, and it amazes me how well he did. But obviously this is not the time to be putting on bull call spreads. I've bought puts and stuff to try to hedge my positions in the past, but not anything like what Ches does or Cubs with the advanced strategies and selling premium, and I know guys that in fact, my next part of my journey is to go through your advanced options courses and start learning these strategies and putting them in practice through paper first, and then going.
Well, I'll probably advise you against that, but we'll cross that bridge later on once we get to a little bit deeper in your journey. But I don't know if that's necessarily the best move for you right now, knowing where you are right now and seeing what you've been posting in the chat room. So you don't really have much stuff to do with options, really.
No.
But kind of, where are you at right now? And then how did you get to where you're at? Because like I said a little bit while ago, we were literally talking about fundamentals and all that sort of stuff. And now where you're at is, would you agree, Ches? It's kind of a 180 in a sense.
It is definitely a 180 in the sense of, how his trading style has gone from, the investing background that he has to kind of now, we got the MR over here looking at 2-minute charts and 1-minute charts and in and out of trades really quickly at different levels and stuff. It's completely opposite from what he kind of came into the room with.
And I want to give him credit. I feel like he's kind of he is a founding father for the markets that he's currently trading. I don't want to steal your thunder. So what you're doing right now. So how did you go from basically buying Clay Trader University, learning about charts, to now where you're at? Let's talk about that little kind of section of your journey.
So I bought it. I went through all the charts or all the videos. minus. I didn't look at the penny stock one. Sorry. I have
No
no
offense
interest
taken.
in penny stocks whatsoever. I never traded one in my entire life. Um, I went through the videos and started chatting in the chat room and seeing how everything works. And then I started trying my hand at trading equities on more of a shorter scale, like a day trading scale. I had always done swing trading, but now this put a new dimension to my swing trading to be able to really try to understand more the psychology of what's going on in the market as far as the chart, what it's telling you. And I appreciate you teaching me that, by the way.
I appreciate
And
you listening. Go look in the mirror. You're the one who actually listens, so good on you.
so basically, I started trading equities, and obviously this year, and I personally believe that there is more risk to the downside than there is potential to the upside at the point that we're at now. So over the course of the year, I noticed a lot of the signs of things that have historically been market tops. I'm not forecasting a market top because this thing could turn around and rip to the moon yesterday. However, for me personally, I started scaling out of my positions and moving into cash. I still hold some very large positions in several select companies. However, I've held a lot of cash throughout this year. First, I started noticing like the all the things that led us here, the chip stocks, the biotech stocks, they started getting assassinated and they're not bouncing back. Apple led this whole bull market. It is getting killed. It's as ugly bearish looking as any stock on that is an oil stock almost. Um, so I started noticing all these things, and every swing trade I tried to put on would just get crushed, no matter how good the setup was, no matter what. You couldn't hold a stock. So ultimately, I ended up trying to day trade regular stocks. Now, mind you, I have a full-time job, so this would be like when I could sneak it in at my desk or this and that. And I started to enjoy it, but like I said earlier in my journey, I couldn't short them, which really limits me. Just for some reason mentally, I just can't bet against the good guy. And maybe if it was that Schreckel or whatever that guy, the KBIO, I might be able to short that one, but you can't get any shares, and it's on halt for the last 2 days.
That's gonna be an ugly one when that opens up.
Yeah, exactly.
So ultimately, I found my way to futures trading, which I think is absolutely amazing. First of all, I have no problem shorting it. So now I'm involved in a two-way market. Second of all, it's a wonderful challenge and it plays into my 20 years of watching markets and understanding what they are, and also what you taught me, Clay. What I see the market as when I do the futures is you are walking, or not walking, but you are entering into a global arena and you are competing against some of the smartest people in the world. So you better know what you're doing. This thing is fast, it's furious, it'll rip your head off. It is nothing to mess around with. However, it's tameable. I mean, you can learn if you learn not just the chart patterns, but the psychology, which is what you taught me. I look at the market now as an auction, and there's value established at certain levels, and the auction is drawn to that value. And if it only trades so much money from, say, 2010 to 2015, then that's going to have very little resistance because there's very little value established. Very little players play the game in that level, and it's going to rip right through it to the upside or downside as it approaches that from a resistance or support standpoint. Excuse me. But that's pretty much where I'm at now. I love futures. They are really awesome. I will still trade equities, and I'd like to trade options when the market is more hospitable. And I'd like to learn some advanced option strategies because I hear of people who are able to put trades on basically some kind of spreads where basically they went into the market for $0 and they ended up with this huge spread playing the UVX going into this Fed meeting, and the guy made 150 grand. He put out no penny. So you have I don't know if there's downside risk involved in that, if it went against him the other way or not, but he put no money out and he made 150 grand. So there has to be something there that would be another frontier for me to eventually get to.
So I guess, I mean, is the I'm trying to think, what's the main divide between stocks and futures? Is it just because you don't have any or psychological problems shorting the futures? Or because, I mean, I know you like the global arena thing, but I mean, stocks still have that global arena fashion. I mean, there's people from all
Yes.
over the world trading. So is it, what, I guess, what's the differentiating factor between futures and stocks? Is it at its core just the whole, I don't mind shorting these, or is there a little bit, couple other things that, or do you just like the volatility too? I mean, what exactly
No,
kind of pushes you
I
more
know.
towards?
I know what you're saying, and it goes back to my psychology and the way that I learned to evaluate stock market. Period in stocks is that in stocks, I see them as something with value. Not that the market doesn't have value, but fundamentally, I can see like Apple fundamentally is worth way more money than it actually is trading for. I mean, its PE is like 9 and it's growing at 35 to 40%, where most stocks, if they had a 40% growth rate, could have double that, and a PE is generally accepted in a bull market, which we're not really in right now. So I see value there, and I find it hard just psychologically to short that value because it's worth more to me. But in the market, I just see it as bulls and bears, and I see it as the difference between the long-term players that are playing on a larger time frame, like the pension funds and this and that, and the short-term players. Not to say that the short-term players can't be whales and be moving tens of thousands of contracts, but it's more of, every intraday move in the futures does not determine where the stock market is going. And I suppose you could look at a stock like that too, but I just don't. I look at a stock as a value, as what they're producing, what service they have. I look at the futures market as a gladiator's arena with bulls and bears, and it's fun. I love it.
That's and there's absolutely nothing wrong with that. You view companies the way you do based on kind of, everything in the past and, them producing things or providing a service. And, you're trading an indexed future, which is, it's not one specific product. There's no CEO of the E-minis or anything like that. It's like you said, it's just pretty much you versus kind of the global market and Globex and whoever else. So it's kind of cool.
In the long run, it's going to go where it's going. But you got these little battles going on in day by day that you can pick a side and you can win, off of a 2-minute chart, a 15-minute chart, whatever it is, you can pick your side and you can win. And with the futures, it takes very little movement to make a lot of money or lose a lot of money. So it's not for the faint of heart.
It's definitely not for the faint of heart. And I think, maybe another thing is that, because futures are different than what you have primarily kind of invested in the past, it's almost like a separation for you. Because I believe you said, I know, based on you in the chat room, you are willing to short in the futures market. Is that right?
Yep, absolutely.
Right. So it's almost like you've created a barrier that futures are in their own different world for you, in the sense that, it's more technical and things like that. You're not looking at ratios and things like that.
Yes.
However, you still have your overall market outlook. That of course doesn't change at all. But at the same time, I think that separation can really kind of lead you to, that distinguishing factor that you're totally comfortable to kind of short the futures, no problem. And is it safe to say you've actually made more money shorting the futures? I mean, I know recently, I'm not sure if you've made more money on the bounces or the kind of the big declines, but I know you've done pretty well on there.
You know what? I find it, because I have an overall bearish thesis, which this is really bad, because I've made more money shorting the futures because I put more faith into my short, even though I should be just trading the bounce or whatever's happening. But I have more conviction in the short trade, and I put on more contracts. So yeah, I've made more money on the shorts lately. It's like Clay teaching from the rivers. You got the giant, you have the lake and the ocean or whatever. You have the big river of the daily chart, and then so on and so forth. Well, my overall river right now is going very flat to very bearish. So for some reason, I'm liking the short side.
What do you use as your overall river? Is it the daily chart, or did you use like the hourly or something like that?
I use a lot of different things. I have evolved completely. I use as
Yeah, let's
far
talk
as
about your setup. And I mean, don't worry about. I mean, you can be as detailed as possible. What time frames are you looking at? You know, what indicators? I mean, the more the mer- or the more the merrier in terms of the details you provide. I'm not saying you have to use a bunch of indicators, but yeah, let's talk about your setup because I'm sure a lot of people are interested in this.
I have a few monitors. I have a few monitors. On one monitor, I have our chat room, and I have a bunch of watch lists, which include all the charts for all the indices, the majors, the Russell, and then I put the futures up there for the Nasdaq and the ES, and then I have oil on there because oil is very predominantly. I think it's kind of you know, right now our market is very influenced by the price of oil. So I have that up there, and then I have our favorite FANG stocks up there because they represent the leadership of this market. And so that monitor, I can kind of see what's going on overall, what kind of day we're having. Is are are we having a generally flat to bearish day, but yet the leadership stocks, the FANG gang, is up and trying to make a run at it because that would influence how much conviction I have in a short if the leaders are trying to stand up. Now, if everybody's going down, then I have no problem. That helps with my conviction. On my main monitor, I have a giant monitor. It's 30 inches, and the biggest chart on there is my two-minute chart. And on that, I have the 10 MA, the 50, and the 200. Then I have the 5 on that chart, the ticks, which I follow the market internals very, very closely to gauge momentum. And then I have the 15 and the daily, and that's about it. As far as moving averages, the only ones I really pay attention to are the 50 and the 200 on the daily. I use the 20 MA on the 15-minute chart, all SMAs, to gauge whether, usually in the afternoon, if we're below that, you can pretty much short to your heart's content. If you're above it, you pretty much want to have a long bias. Obviously, this is all conditional on what's going on. But that's about it. My main trades for entries are off the 2-minute chart, and with I always keep in mind the 5 and 15 and the daily, just keep the whole river going. But for exits, I generally try and follow the 5 or 15, something a little further down the line.
Yeah, something to kind of trail those winners, and yeah, of course the 50 and the 200, those are kind of the heavy hitters. Those are the most well known ones, kind of helping the self fulfilling prophecy. But
I want to make a point here real quick, Ches, is if you're listening to this and you're thinking, holy crap, this guy's looking at all sorts of stuff. There's kind of like a lot that goes into a decision. Exactly. So if you think you
Yep.
can go out and pay for a service that's going to send you text alerts or email alerts, and if you think that's how trading really is,
Oh,
you're not living in reality. Yeah. Now, can you learn how to do this? Yes, I'm confident you can learn how to do it. You being the listeners out there who maybe were just feeling super overwhelmed by what MR just went through, but you can learn how to do it. It's not going to happen overnight. It's not going to happen within a week or a month. But I mean, you can trade. You can learn what to look at, and for those of you that have
it's
been around,
something that can be taught. Yes,
it's
I
yeah,
agree.
something that can be taught. But the whole point is, it's not just I think a stock's going to go up. There's
no.
my trade plan. Here we go. No, there's, as you just heard, there's a lot more to it than just that. So sorry to interrupt, but I just thought
Oh,
this is beautiful because it sounds complicated, and it is complicated if you think that the market is just as easy as, hey, I'm going to sign up, $297 so somebody can send me a text alert.
it's
Yeah,
it's
that's
only complicated at first, but what you need to do, and I tell this to everybody in the chat room because they see my gains, and I see a lot of people getting interested in futures, and I always use the disclaimer that that you'll lose really fast as much as you will win, but it's only complicated if you don't watch it for months and months and months and maybe years until you get to understand what you're watching. There's no simple rule. I know everybody wants, oh, what's this 15-minute rule? What's this 5-minute rule to trade the open? What's this rule? What's that rule? Well, every one of those rules are really just a probability based on odds. And those odds are increased or decreased by what's going on in the general river, shall we call it, of the market. I watch the advanced decline line, the breadth. I watch when core sector lists of the S&P, when they're rolling over from 19 positive to all of a sudden now they're 8 negative. All these influences help me decide whether I need to be short or long. Then you have, I follow market internals, which I know Pendar, another member, really loves market internals, and I use all the support and all the setups that I learned in your videos. And between all that stuff, it sounds complicated, but ultimately it takes time, patience, and a lot of effort, and it all becomes more clear. And you're going to be wrong. I mean, you can't always be right, but you
Say
got
that
to
again. Say that again.
You're going to be wrong. You're going to be wrong a lot. I'm wrong a lot, but I cut them out real fast.
There you go. Yeah. So would you agree with this? I said it before, but if you have too big of an ego where you don't like to be wrong or you don't want to admit that you're wrong, would you agree that trading's probably not something that you should get into?
That's 100% right. It's all psychological. You get these indicators and everything, and just like the beginning of my story, you have your plan. Your plan could be taking place on a 2-minute chart in 1 minute, like some of your videos, Clay, or it could be taking place on a daily chart over the course of years. But as soon as you lose that plan and go off the reservation and won't admit that your plan is going wrong, you're done. You're gonna lose it. You're gonna be buried.
You certainly are, and I think a good. Honestly, there's just so many gems in this podcast; it's ridiculous. But the fact that you're going to be wrong, and you have to be comfortable with that. It is a probabilities game, and you got to nip those quick. We are risk managers at heart, and that's how we really kind of stay in the game and profit over the long term. At the same time, you have so much seat time looking at charts now and kind of just working on your craft, honing your craft. This did not happen overnight, and I think a lot of listeners need to kind of realize that. And I can tell you from my pretty much, I'm super new to the market. I have almost 3 years now, but at the same time, I'm at such a higher level than I was, and that overwhelming feeling of we're talking about looking at 4 different time frames and market internals. To me, this is all completely natural now. But at first, if you are brand new to this, you're just kind of new to the podcast and stock trading in general, it's going to feel overwhelming. But as your seat time, as you practice, as you paper trade, you're going to get more comfortable. And, like MR says, he knows he's kind of in groove with kind of the rhythm of the futures market that he's trading. You will develop that rhythm and kind of it's almost like your brain has just learned the patterns and things that are profitable generally and are a high probability setup. But I'm getting long-winded here. So obviously, losses are something that we all take as traders. How did you mentally deal with a loss, say, right when you were beginning in your kind of investing days, versus how does a loss mentally affect you now that you're kind of trading on a shorter term time frame?
Because the one thing you specifically is that when that one gap down on you, you made the comment like, I don't want to admit that maybe I was wrong or whatever. You just held, and then you used the H word. You were hoping. So it sounds like, and now the way you're going, if it's long, you just cut it loose fast. So I mean, it sounds like your psychology is totally flipped. So yeah, like Ches was saying, explain that a little bit more.
Well, through all the all the studying and all the things that I've learned, is one thing I've learned is a pretty interesting fact is that even the greatest traders in the world are wrong. I believe the stat is 65% of the time. So the only way to survive those kind of odds are to cut your losers fast enough and let your winners run long
Preach
enough.
It, brother. Preach it. I'm starting to tear up over here.
Let your winners run long enough to get over, to overcome the smaller losses. If you allow yourself to take those big losses, you're in trouble. I took a big loss earlier this year. Relatively speaking to what I'm would normally allow myself to take. I was messing around in something that I probably shouldn't have until I understood it more, and that would be called options. And I bought a $40,000 option position in a company that I knew very well and that had gone in a straight line for years and years. And the company, I couldn't get out of it at the end of the day. It was just illiquid. I didn't understand the product. I was playing with fire and didn't even realize it. And $40,000 to me is, I don't want to say it's nothing. It's a large amount of money, but usually when I would be trading, I will take $100,000 position in a stock and day trade $100,000 position, sometimes more. Sometimes a big mud stock, like you call it, like Microsoft, I'll trade a $500,000 position. I don't care. You even more sometimes, and then you get 10 cents, and you had a good day. So a lot of people see my gains that I have, and it's really just a matter of leverage. A lot of times, if you're, it's not a matter of, oh, Mike is the greatest trader in the world. It's not like that. It's a matter of leverage. Even with futures contracts, you trade 10 contracts, you're swinging $1 million stick. So when you hit something, you're going to hit it pretty good, either way, up or down. So anyways, I was playing with fire, and I couldn't get out of it because I couldn't sell it. I didn't want, this is the funniest thing. You'll love this, Clay. You'll probably cry. I didn't want to lose $250. I did not want to lose $250 because I couldn't get out of it. So I said, I'll just sell it first thing in the morning. It always gaps up a little bit anyways. I'll be able to get out, and then I'll be on my merry way, go on with my day. That day, the stock gapped down like huge. And as soon as, well, it gapped down moderately, but then as soon as it did, I was like, uh-oh, something's wrong. And I sold half my position at that point. So I was still holding about $20,000 with them. I think I took a $2,000 loss on the first 10 grand worth, 20 grand worth. And then it just went straight down for like 3 gigantic red candles. And I was like, oh my God. And my options that I bought for like $10 a piece went down to $4 or something in a matter of 3 minutes. And I tried to ride it through, and it came up and down and up and down. And ultimately, I ended up just saying enough's enough, and I cut it. And I think I lost somehow I lost $25,000 in the whole trade. So it was ugly. I think the first batch I lost $4,000 on or more. I can't remember.
It was a significant amount, though.
It was amount of money, and it was because I was uneducated in what I was doing, and I allowed myself to take the risk. I mean, nobody made me say. I should have just said, okay, it's $250. Who cares? Sell it. It sounds like a lot, but I didn't. The plan was that it was a day trade, and I held it overnight. So there you go again. I broke the plan, and I paid the price for it. So,
yeah, you summed it up perfectly. Before you even started, you prefaced it with, I was involved in something that I shouldn't have been involved with in the first place. And that pretty much pointed to me, all right, well, I know what path we're going down here. Because usually for you listeners out there, if you're getting involved in something that you shouldn't be, and like MR just said, he was undereducated, didn't quite understand everything, bad things can happen. And then especially they get even worse when you start breaking even more rules where, yeah, that's a day trade. Okay, no, now this is a swing trade. And yeah, so that's just, thank you for sharing that, because that's a perfect example of how things truly can spin out of control if you allow them to spin out of control, which is what happens when you break trade plans. So yeah, that's a good, valuable lesson, to everybody listening, including myself. I mean, everybody always needs a reminder, don't let things spin out of control. If you broke a rule, just make it 1 rule. Don't make it 2 rules and then 3 rules. And then, before you know it, things are just a catastrophe.
Then disaster.
Yeah, it is.
And then to emphasize the point of how important education is, about a month after that trade, I had realized that, hey, my account, I have a big enough account, I could have just exercised it, took the shares, and then sold the thing for a gain 2 months later. I mean, there were so many different strategies I could have employed to mitigate the risk, make the money back, selling puts on it, whatever. But I had no clue what I was doing. So I basically just got what I deserved. I thought that you just buy options, and it's just like buying stock, and it is not something you should play with if you don't know what you're doing. So there's another lesson learned out of that one.
Yeah, no, that's super valuable. And we got to start to wrap things up as, this interview has, it's gone on so for a while, and that's totally fine. Ches and I have been talking on Skype, and we're like, let's just go with it. This is longer than normal, but we just went with it. So it is what it is.
Story.
But yeah, it's a great story. So just quickly, in a few sentences for each, what are some things that you believe you're doing very well right now? And then what are some things that you think you would still like to work on a little bit?
Well, I've been doing pretty well with the futures. I'm like I said, ultimately I'd like to start to learn more about options so that I can start to learn how to hedge positions and put on ultimately different types of strategies, because not one trade fits all markets, and depending on where the market takes us, if we go back into a bear market, everybody in the chat room is going to learn a new strategy for their long-term holdings and everything. I mean, you have to be flexible and be able to play in the playground that we have to deal with, you know. So that's where I'm looking forward to next.
Yeah, you definitely have to, you have to be able to adapt. It really is as simple as that, because things that work today may not work tomorrow. And, just like you said, it may not be the old case of buy the dip, which we've been kind of conditioned for years, or bad news is good for the market, things like that. Things might be changing. So you have to be looking at the market. Now, if you're swing trading, you're still looking at the daily charts. I'm not saying that, you have to be staring at the 2-minute charts like us when we have time. But honestly, I'm going to actually give you a good amount of creative control here. I'm going to, without any stipulations at all, hand over my time machine to you, and you get to pick what time you would actually use to kind of go back, and what would be the one piece of advice you would give yourself at whatever time you decide to go back.
Uh, there would be probably just a couple quick things. If I could go back to when I first had my first big win, and the money came in, and I was more busy trying to tweak my spreadsheet on how I was going to be a multimillionaire before I was 30 than looking at the, market with realistic eyes. I would say be realistic, don't be greedy, stick to the plan. The plan can evolve, but you got to stay to the core principles of it. Don't listen to anyone but yourself. When the market isn't safe, get out. And again, don't give other people information that they can hurt themselves with. Like like if someone's not capable of understanding what to do when the market turns south, I just don't want to be involved in giving anyone advice. I went through it once and it's terrible. I don't want to do it again.
I definitely don't blame you. So we'll kind of switch notes here a little bit and move into our fun questions. And I'm gonna kick this party off. What is your favorite movie?
Oh boy. I am not pegged to just one movie. In all honesty, I have many. I could watch. I love Jaws, Austin Powers, Aliens, old Clint Eastwood westerns, The Terminator, anything but chick flicks, pretty much.
So
He's probably got he's probably seen more movies than you have, Clay, and you call yourself a movie
well,
buff
I don't
too.
know. I think I might have him on chick flicks though, because I mean I'm watching a
That's
chick
true.
flick at least
That might put you over the edge there.
at least
Chris, if
once
you
a
have
week.
to.
So I definitely have him in the chick flick category.
But so what would you say is your favorite meal or dessert?
I'm very simple. I like pizzas, burgers. I do like tapioca pudding. I know some people think it's gross. That, or like a pumpkin cheesecake. I'm not picky.
Very nice, very nice. Sounds like a lot of American type meals.
Yeah. Well,
What what kind of hobbies you like? What do you do when you're outside of the market and outside of your normal day job?
I like obviously stock charting, and I like to look over the market, as everybody knows. But when I get away from that, I like to relax with a video game here and there. But I really love 3D modeling and animation. I'm really into building and designing models and then animating them and all that fun stuff.
And we appreciate that in the lounge chat room where you're always posting your funny images, and you got it. We talked about that today. I would like to request you make one where like you can type in any ticker symbol you want, and then it shows up going down that toilet that you did today. So if you can find some time in your schedule to try to automate that, that would be fantastic. Because I'd love to start to go around some of the penny stock message boards and post that just to let people know what's actually going on. But So yeah,
that's
that'd be my
pretty good.
special request for you is
They
we need
they do make us laugh. It's not the same when they're not posted around. And when you're busy at work or something and you don't get to post them, we're always waiting for you to come back and give
the
us the
cheerleader,
cheerleaders.
another
Yep,
classic.
the
Yep, the
cheerleaders.
cheerleader. Yep.
You guys
Cheerleaders,
can
classic.
always take my cheer team and put them on your desktop and deploy them as necessary.
But it's not the
That's true.
same. It's got to come
That's
from
true.
you. It's got to come from the Leonardo Ninja Turtle. I mean, that's
right.
just the way that the system operates. Ches, I think you got one final question for him.
I do. So, MR, what 3 words do you believe are associated with successful traders?
I thought about this, and there's quite a few, but I think discipline, persistence, and flexibility. You will not be successful if you cannot be flexible. I mean, you have to stick within your plan, but if you are in the middle of a plan and all of a sudden you see the market breadth diving and the ticks are going to negative 1300, you better reevaluate your plan, be flexible enough to sell before you get to your target or even your stop sometimes. You just got to be flexible with things. And like we've been talking, you have to be flexible enough to let your plans evolve as the market conditions are changing, because everybody knows in our chat group, in the beginning of this year, you could trade one style and you could be very successful. Towards the middle of the year, that started going out the window. I think now everybody's pretty much got their groove back and evolved to this, whatever you want to call it,
Exactly.
volatility.
Everybody's adapted. Yeah, I mean, trading
You
is a
had
game of adaptation for sure.
you had no choice. It's
Yep.
adapt or die.
That is flexibility. That's a great word. I don't know if anybody's used that one yet, but I will fully agree. Well, hey, MR, I really appreciate you spending so much time with us. This went longer than normal, which is totally cool. We just went with it. So thank you very much for hanging out and being transparent and definitely, like Ches said, sharing quite a bit of good nuggets of wisdom. So thank you very much.
You're welcome. I hope it was all right.
It was more than
was
all right.
great.
I assure you that. So for you listeners out there, if you're listening to this at claytrader.com, please click that share button. Leave us a comment down below. We do read those, and they really help us out. If you're listening on iTunes, please leave us a rating and just let us know what you think. And little clicks of the button really do go a long way. So thank you for hanging out, and thank you for learning about MR's journey with us. And hopefully you can take a few bits of those nuggets and apply them to your current situation. Take care, everybody. We will see you back for the next episode.